So right now I'm in a supply trade and I'm currently floating about £600 at the moment. So over the next 3 days, I'm going to be showing you guys everything that you need to know about supply and demand so you can master this strategy. It's something that's taken me years to learn, but we're going to break everything down. There's 3 pillars that you need to know. We're going to dive into the first one today. Let's get straight into it. Okay, so one of the first one we're going to touch on is market structure. This is the key foundation that is going to put everything else together. And the next time we're going to talk about fair value gaps. That's going to be the next bread and butter, but let's get into market structure. This here that you see right now is market structure that is extremely hard to read, right? Prices going sideways. When this is playing out in real time, it's going to be very, very difficult to read. But when you go to like the 1 hour time frame now, you will suddenly see market structure suddenly becomes a lot easier to read. So right off the bat, just know that if you struggle to read price action, being on a higher time frame does help. It's significantly easier to read this. Like just seeing this right now, you know, overall price is in a downtrend. That's just the general vibe you get. How do you know this? Because you can see price is breaking lows over and over again. Just generally, price just keeps going down over and over again until we arrived at this point where price has now kind of formed some sort of support, right? But overall, again, price is still in a downtrend. But when you go into the 1 minute, 2 minute, it starts to get a lot harder. And this is where most of us want to be at. And we see content creators kind of trade the 1 minute and we want to trade that as well. But it's a lot harder to read, right? You're trying to, determine where's price going here. And then you tell yourself right now, this is like a break right here. And then maybe you have another low that is broken right here, and price just keeps forming, higher highs, lower lows all over the place, and you can't really determine where price wants to go. So let's make this a lot easier. So first thing I recommend is stay away from the 1 minute. 2 minute is a lot harder. Start from like the 3 to 5. It gets incredibly easier. The 5 is like the minimum I would say if you're new to trading, the 5 minute. So looking at something like the 5 minute now, how do you read price action? So this is London session. This is where I'll usually start trading. So just looking at this right off the bat, we can tell price is already on a bearish trend, right? We broke this low, we're breaking lows, and this low is also broken right here. So this is very easy. All you need to do is just keep looking for price forming the same lows. No high should be broken. How do I know that a high is broken? A high is broken once price closes above the previous swing. So in this case now, right here, I know a change of character has occurred when this high, the swing high right here, gets broken. What do I mean by broken? When price closes above. Not wicks above, it has to close above. So this trade I'm currently in at the moment is still sort of consolidating, but we're still in profit. And this trade is being copied onto my Blue Guardian prop firm challenge at the moment. And the challenge is going pretty smooth, currently up 3K. So this is the best time to tell you about Blue Guardian. They are currently sponsoring this video and they are a prop firm that, as you can see, I'm currently using, trying to pass a challenge with. So far, it's been an amazing experience. The customer service is pretty good, leverage is pretty good. I've had no issues so far entering the trades that I go into because I'm a scalper and usually some prop firms, their leverage is so low that you're not able to take these trades. But so far, I've literally had no issues whatsoever. One of the best things about them is that their commission is industry standard, so you know that they're not eating too much into your profit, especially because that does make these prop firm challenges a lot harder. Most prop firms these days also do not allow copy trading, but as you can see, I'm able to copy trade from my personal onto these prop firms, so that way you can trade multiple accounts. This way you can focus on one account and literally copy your trades onto as many accounts with them as you want. And one of my favorite things about them for sure is that they still stick with balance-based drawdown. This is one that is necessary for any trader. If you want to be profitable, you don't want to use another drawdown. You don't want to use any other form of drawdown because this will mean that your stop loss keeps trailing and it just causes issues with the maths. But in terms of the traditional rules, they are keeping it simple. As long as you're a good trader, you follow the rules, everything's extremely simple. You're able to trade the exact trade that you want. And once you do pass these challenges, once you do start to make 1, 2, 3%, any percentage that you can make, then they're going to reward you with a payout and you're all good to go. So prop firms is the future. Make sure that you do check them out. There is a link directly in the description of this video. Use code SULLY for the best discount. And thanks to Blue Guardian for sponsoring this video. So looking at something like the 5 minute now, how do you read price action? So this is London session. This is where I'll usually start trading. So just looking at this right off the bat, we can tell price is already on a bearish trend, right? We broke this low, we're breaking lows, and this low is also broken right here. So this is very easy. All you need to do is just keep looking for price forming the same lows. No highs should be broken. How do I know that a high is broken? A high is broken once price closes above the previous swing. So in this case now, right here, I know a change of character has occurred when this high, the swing high right here, gets broken. What do I mean by broken? When price closes above. Not wicks above, it has to close above. So in this case, price doesn't do that, right? Price keeps dropping, and you can see in this case, price has closed below this previous swing right here. So we just keep having lows being broken over and over again. And now for another low to be broken, you want to see a retracement, and then you want to see price continue again and break this low this time. That is how you read price action. Lows have to keep getting broken, or highs gets broken, and depending on what's happening, then you want to determine if you want to take buys or sells. That's the first thing you have to look for. Without knowing the direction of the market, don't enter a trade. Now let's look at a different day. So you can see on this day, how do I read price action in this case? I'll give you 2 seconds to just kind of look at it and just determine, okay, cool, where's price overall going? Right here, we can see that price is forming higher highs, right? So price did this. So overall, price is pushing upwards, but we do have consolidation right here. So if you are at this point in time, if you are currently at this point, what would you want to do? Find a short position, find a long position, or just wait and do nothing? In my opinion, don't do anything as of yet. You don't really know the direction market is going. Yes, it's pushing upwards, but I wouldn't do much. But if I had to, you know, there's a setup that was there and I just have to take a buy or sell, then at that point, the best bet is still to go for a buy because price is pushing up overall. That will be your next best option. But just taking shorts right now is a very bad idea. Now, in the instance where you do have a low that gets broken like this, do you start looking for sells? No. In this situation, you don't want to start looking for sells yet. I prefer for that to happen at least twice. So right here, this is a change of character. So you want price to now push up slightly. You want price to do this and then continue. Now you can start considering looking for a short position. But until then, nothing. But until then, there's nothing that you can really do, right? As of now, you want to see price do that again. Does price do that? Exactly. So you see price do that exact thing that we're looking for. In this situation now, then what I'll be looking for is a supply. I'm looking for some kind of supply to form that's high probability. This is technically a supply, but it's not high probability. And we're going to go through the difference between high probability and low probability supplies in the next video. But as of right now, this is what price does. Right now, price is just consolidating. There's not much happening. What you want to avoid is reading between the thin lines. When you see this, this is just noise. You want to avoid trying to say maybe this is a break right here and then another break here, because all of this is just noise. So the best thing to do, best practice, is zoom out and just read the overall picture, right? Instead of trying to scalp or look at the tiny details. Let it be clear. If it's not clear, the best bet is always to just do nothing. So right now, price has decided to push upwards again. So we have two demand zones right here. We have one right there, and then we have another one right here. In this situation, this I've touched in a different video. When you have two zones like this, I'm going for the lower one. It's just a lot safer. There's no point going for the higher one. That's if price does come back there, right? But in this situation, all you're doing is waiting and sitting in your hands. So that is how you want to be reading price action. We're going to do one more example. Okay, so another example right here. So we're looking at, we just jumped onto the market and we don't know what to do. As of this moment, I'm looking for shorts just because price is generally going downwards. Just generally, right? Don't overcomplicate it. Just look at it. Price is generally going downwards and I want that to continue. So right here, I can see that price has given us a supply. That's one supply. I personally prefer for the gap to be filled. So I do want price to come all the way up here before I do enter or do anything. So you can see price continues to break low, just as we touched on, right? We had a retracement. Price has now broken this low again. So now we have another supply that's been formed right here. And you can see price does tap that supply. So in this case, I'll be entering this trade right here. And I think this is a trade I did take in the past, hence why it's actually already set up. But I'll be entering that trade right there. And you just want to put your stop loss right above. And so you're going for a winner, right? In this case, what happens? Boom. So price does give you that winner. So the key thing here, right? This doesn't happen every single trade, but this is generally what you'll be taking day in and day out. All you have to find is market direction first. Once you have that, you want to find your setup. And then you just take it. And you can see right here, we got that one out and then price immediately rejected. As long as you're going with this trend, this is trading 101. As long as you're going with the trend, you will generally be okay. You'll generally be just taking the best possible trades you can. If you're going to go counter trend, and you want to make sure you have several confluences in your favor before you do that. So right now we'll just touch briefly on market structure. Next video we're going to go on to fair value gaps, and this is where you're going to now add to the market structure that will increase the chances of you winning the trades that you take. Without this, everything has not been put together yet. So make sure you subscribe and stay tuned for that next video.